Hello everyone and welcome to today's webinar. My name is Lucy Heavens and I'm the VP of Marketing at Salv. So over the next 45 minutes, we're going to be looking at APP fraud and beyond the detection and prevention of APP frauds and more into the recovery process. Usually at this point, I would run through the housekeeping items, but today is a little bit different. So we actually hosted this webinar live, but on that day, the technical gods were not on our side. They were not looking after us. So although some of our audience did manage to watch it live, many people missed out. So that's why we're here today. We are re-recording this for you because we know that it was actually in quite high demand. So before we start the panel discussion, I just want to take a minute to set the scene. So a month has passed since the new, or more than a month now since has passed since the new APP fraud reimbursement rules were implemented in the UK. And financial institutions have been really laser focused on detecting and preventing APP fraud. But how much attention has really been made to the recovery process, the recovery of those stolen funds? So, I mean, you know, we just being realistic here. We're never going to completely stop this bank impersonation fraud. The criminals are always going to try their best to be, you know, one step ahead of us. But I think if we can be quick at detecting it, we can be even quicker to do everything in our power to stop that stolen money from moving any further and get it back into the hands of the rightful owner. So no loss for the bank or the victim, and you know, everyone's a winner. Well, everyone except the criminals, of course. So how can we get better at this recovery part? What tools, resources, processes need to be in place? And how can we work together in a more collaborative way and share intelligence to increase the effectiveness of that recovery? So this is why I have invited my special guests here today to talk about this. So James, I'm going to come to you first. I dread to think what the rates are going to be for 2024, but the last PSR report showed that in 2023, 67% of money lost to APP scams was reimbursed. So aside from the main recovery rate, what are some of those key metrics and KPIs that organisations should be tracking to measure the effectiveness of their fraud recovery processes?
Thanks, Lucy. It's a great question, and yeah, I share your rather optimistic view on what the recovery rates might be for 2024, and I guess we will find that out as we see what sort of effect this reimbursement scheme has had over the next few months. I mean, quite obviously, you said aside from the main recovery rate, that is always going to be the bottom line. It's always the most important one. It is that recovery rate, but tied to that is other key KPIs, which sit probably more in the prevention and detection piece, but will get us to that recovery element. Obviously, it's not just the recovery rate; it's the actual levels of fraud against the institution or against a particular product. And I think breaking those down into product types and customer risk typologies is really important, because that gives you a good understanding of where you may be targeted specifically. If you are being targeted by, say, an organised gang who's looking to approach one particular product or firm, or it's a lot broader than just thinking about the actual detection prevention. It's also, there's some key elements built around that operationally, so to speak. So do you have enough people in place to deal with the volumes that you're seeing? How do you deal with spikes in those volumes? What's the operational elements sat around that, and are you ready for those spikes and fluctuations in the fraud rates as they change over the days and months? But fundamentally, when it comes right back down to it, it is around the recovery, isn't it? And it's about what is that recovery rate? How quickly are you able to track down, communicate with other institutions, and sort of repatriate that money back into its rightful place?
Yeah, awesome. Thank you.
Maybe I can add also some thoughts here, because like it's important to keep in mind that when we're talking about mandatory reimbursement, and we're talking about how much funds are being recovered for the end users, for the customers, but also, and that's important to keep in mind also, is like relatively high reimbursement rate that we're seeing right now, like we saw before the law changes, these were paid back usually by the victims' banks or the large banks who were withholding the victim accounts, and probably very little was paid back by the other institutions through whom this fraud was happening, or the institutions whose infrastructure was used maybe by the money mules. So it was like secondary institutions. So I think that I would like to see, like when looking forward, what the split is going to be between the victims' banks reimbursement and also the money mule accounts. Obviously, by law it should be 50-50. Now it's split until now the split between those two has been 100 and 0, I think. So that's going to be a drastic change for some types of organizations, but not so much for the banks themselves, actually. That's one thing, and the other is that just to be clear with the terminology, then the recovery for many institutions can mean also the internal recovery, how much they are able to recover their own losses. So it's like reimbursement for the customers. That's one thing, definitely, but also I would really love to measure and see what are the numbers going to be around like recovered losses, fraud losses for the banks and fintechs themselves, which is actually going to be determining the success of the whole process.
Yeah, I think I totally agree with that, Harvey. That's a very good point. And when we think about the 50-50 split, and we think about the differing sizes of the institutions in question, we're going to have tier 1 banks all the way through to neobanks, and smaller PSPs who, for their internal recovery rates, are very important. We'll touch on this as we go through, but for those size firms, liquidity is everything, and that's been one of the main concerns around the implementation of this reimbursement model, and the actual volume, as we know, it's gone down from 415,000 to 85,000. So I completely agree with those comments, Tavi. I think that internal recovery rate is going to be crucial for a number of firms.
And just to build on that, I think I've heard from many people working inside of these financial institutions that for the large banks to cover the losses or like paying back the monetary reimbursement, it's for the large banks it has been like almost like PR cost, or it hasn't been like material loss for them to pay it back. Whereas for the fintechs and for the much leaner organizations who are like every penny counts, that has been like really dramatic loss or risk of the dramatic loss. So I think the impact of the €1 or £1 loss for one institution has been very different from loss for other institutions. So that's also something which will probably motivate organizations to behave very differently from each other.
I've also, and correct me if I'm wrong, James, but I've also seen some news articles around some of the banks actually having a kind of £100 sort of charge or something, I think it was, that we passed on to consumers. Almost it sounds a little bit like a kind of an excess that you would have on your insurance. So when they're making an APP fraud claim, £100 of that is always retained by the bank anyway.
Yes, and we're seeing different approaches to this. I think some institutions are using that £100 excess maybe as a sort of deterrent, maybe is the wrong word, but sort of maybe trying to weed out some claims that maybe not as valid as they could be, because this model is so broad and so all-encompassing, that's completely in favour of the customer at almost every stage. I think some institutions are trying to see that as a way of maybe trying to control the number of claims that they're getting through, just as a stop check more than anything, to stop hundreds and hundreds coming through where they might have only seen a small amount before. And I think the other end of the spectrum, other institutions are not applying that at all, because they don't believe that's something they need or want to do. So a bit of a difference in opinion so far, I think, in regards to that £100.
Yeah, and I think, it's interesting you say that, because it's another thing that I've sort of heard a lot of talk around, the increase in first-party frauds, and some sources saying that even the criminals are kind of hoping to sort of take advantage of these new rules as well, because they think that the consumers are going to be more willing to take risks, knowing that they can get their money back easily if this bank impersonation fraud was committed. So Tavi, a question for you then, I suppose, on that. Like, how can financial institutions manage that balance between fraud mitigation and the speed and efficiency that of payments that customers are expecting nowadays. Oh, I think you're on mute.
Apologies. It's a difficult question because it's at the same time, like when the speed of payments and speed of financial services has to be kept up, and like it has to be near to real time, which doesn't give much time to make long investigations or suspend the payments. Otherwise, like financial institutions would take additional risk with getting fined, like when they're not processing payments fast enough. And I think in UK, but also in the wider Europe, we see the regulations moving towards that like bank transactions have to be as seamless as card payments, and that introduces new set of risks. So like what I like to think and how I see that organizations are working is that they're consciously like separating movement of money from the actual investigations. So there's like two separate or parallel worlds or systems going on. Like one is for processing payments, and the other one is like for processing collaborative investigations. And then like there is a saying that like follow the money, like with these investigations. And it's like what does seem to help them is that even if this even if they cannot prevent the fraudulent transactions, and if the money is originally gone from their own accounts or from the source bank accounts of the victims, then actually it's not the end of the world, or it's not completely awful, because like thanks to the collaborative investigation technologies, like the one that we're offering, is that the bank's AML or fraud team can connect with the fintech's respective team, and what can pass on the message that, hey, this transaction that just went through, we were late to stop it, or we're going to stop it, but maybe you want to take a look at this, and like maybe you want to suspend the account to take an investigation. And like quite often we see that this kind of messages or collaborative case investigation notification that are moving on, they're very accurate. Like more than 80% of these guys are like true positive. These alerts are true positive, and also like in lots of cases, the money is stopped by the second institution, or sometimes even by the third institution, and then it's sent back, and thereby the losses being reduced. But also it happens still that instant payment or faster payment has happened originally. So that's like one way how organizations can tackle that, and of course that's one of the ways. But sharing more intelligence between the organizations is really helping to tackle not only the single transaction, but also I'm looking statistically. It's key to think about like tracking or hitting the criminal networks or like wider schemas, and even if the 1 or 2 or 3 transactions are going through, it's a sad. But if this joint investigation follows to that, and they're able to detect much bigger network or list of money mules from this specific financial institution, then actually this network of money mules can be closed down, and it prevents the further losses. So that's also important to keep in mind, that like it's a statistical fight. It's not about every single transaction, but it's about like tackling the bigger pot of the criminals, and that's quite effective actually in the end.
Yeah, definitely. So you're saying, the kind of the speed of the transaction is what it is. It's always going to be, there's only so much friction that you can add into that, but the best thing is to sort of optimize the process after, I suppose, and that's the bit where we can really speed up the collaboration that happens, and how and the impact that has on kind of recovery and that sort of thing.
I think in relation to that, I mean, Tavi again is, as always, is right. You know, the transactions are the transactions. They're done in milliseconds, and having a good reason to stop the clock, as the phrase goes, I suppose, to do some investigation. And that is the key element. That's what you really need to have your teams up and running, and your intelligence and your data, and hopefully good relationships with the opposite bank. Interesting things that might arise from this, I suppose, at the other end of the spectrum is the potential almost overuse of that stop the clock piece, and which could lead to a detrimental customer journey. When we talk about friction, if all their payments are getting stopped all the time because they look slightly strange, customers are not going to be happy. and they may move institution or put complaints in or do whatever else it may be, despite the best intentions of the bank itself to try and prevent fraud. And equally, a situation could arise whereby the more uncooperative banks get noted by certain institutions. So if the money is moved to this one, they'll never speak to us, and that may just lead to some uncooperative positions, as opposed to us talking about all this need for sharing of intelligence.
Absolutely. I mean, the fact is, I think on the kind of the customer side, most of them don't really understand or know what APP fraud is, right? So, I mean, James, from your point of view, like how can financial institutions educate their customers better, helping them to sort of understand a bit more about what it looks like to be a victim and what their rights are if they do become a victim?
Yes, certainly, and this is one of the key areas. I think everybody agrees on this, that customer awareness of what APP fraud is and also their rights underneath this scheme as well are very important. I think there was a big push before launch. We saw a lot of stuff and lots of articles in the papers. We've had panorama discussions around victims of scam frauds and so on. There's a lot of awareness pushed there, but I think the statistics are still saying that most people just don't know what this is or what it entails. And educating them is difficult. Banks are doing it in different ways. You will have seen it yourself when you've tried to make payments. You may get notifications through on your banking app saying, "Are you sure you've seen this object, or do you know the person? The services that you're trying to buy. Are you absolutely sure that you want to do this?" There's a number of those have popped up on different apps, sometimes with slightly different messages, so it tries to catch your eye. And the reason for that is we become very blinded to these messages quite quickly. You've probably all done it yourselves as well, where you know that what you're doing is right and what you want to do it. So why am I being asked all these questions? Click through everything and just get on with it. But ultimately, there are controls that are there to try and stop you from doing something maybe untoward. So keeping that fresh and in the eye of the customer is probably the biggest challenge. There's so many other things out there competing for customers' attention. Trying to do this in a way that's viable is difficult. And let's not forget, we spent 20 odd years telling people not to speak to their bank because the bank will never call them and ask for certain details. Well, ultimately, that's probably one of the better solutions, would be the ability to set up those communication channels with your customer and have a discussion with them. Because a lot of these scams are in relation to people being tricked into thinking something that just isn't true, whether it's a romance fraud over a long term, or just objects that don't exist, or you pay for something, you end up getting something else that's of no value, or whatever it might be. A lot of the customers will be absolutely convinced that what they're doing is right. I think sort of lastly on this point, I've seen examples of one tier 1 bank who's now started employing counsellors in their customer call centres for those situations whereby to try and discuss with customers, particularly on the romance fraud side, that what is happening to them is not real and it's not good and it's not going to end well, and they're very difficult conversations to have. So it goes against the speed and efficiency of the reimbursement scheme and just the operational speed of teams in banks who need to process a lot of potential fraudulent claims all the time if they then have to spend a lot of time discussing with customers something that might be happening to them, although fundamentally that is the right thing to do, because that's what this is all about, protecting the customer. Yeah, absolutely. I love that idea about the kind of the having counsellors, because I think it's always sort of seems a little bit sort of transactional, doesn't it, when you get on the phone to them, and like you said, the questions that they ask, do you know this person? If you're part of a romance scam and you've been talking to somebody on a dating app for the last 2 years, of course you're going to say yes. I actually had one the other day when I made a payment where the message was something a little bit different, and it was we will not call you about this transaction, which I thought was you do get blind to them, especially when you're seeing the same message over and over again. So seeing that one really made it jumped out. Tavi, sorry, was you going to say something?
I was just checking my own bank's website like before even logging in, and it's about one quarter of this page is covered with a big red sign saying that be careful with this stuff. But actually, before we started to discuss it, I didn't even notice it, because like getting blind to these things if it's just regularly. I think there are like marketing wise or like education wise, there are lots of things to do also in social media or like the other channels which are not that heavily used by the banks, fraud fighting teams. But also like I would look at from the different angle that I think it has been reported by some SMS providers, and that the success of these scam campaigns, it's like maybe 2%, between 2 and 3%, which means that actually 97-98% of the target customers are actually safe and they know what to do and they're not reacting to that. And now my question is like, even if banks would increase their education and marketing spend by 100%, would it actually reduce this remaining 2 or 3% down to 0 point something? I guess not. So like there are some people who are reluctant to this kind of, or not reacting to this kind of training, and they're still getting cheated. So instead, the bank should invest this remaining money, like whatever they have, into the actual fight against crime. And that's again like implementing new procedures, new technologies, training for their own stuff, and not trying to minimize the number of victims, because these victims will be there anyway, and there's a gradual like reducing return of investment into that space.
Yeah, that's a really, really good point. With my marketing hat on, you know, we know that the gap between the trust that people have in organizations versus kind of, you know, their peers is huge, right? You know, probably the best thing that we can do as an industry is pass that education on. And I kind of urge everybody, I use this test actually on my own family and friends when I ask them, you know, will your bank ever call you? And it is really interesting what you get back. So yeah, maybe try that test at home with your own friends and family. But Tavi, you mentioned a minute ago, you were talking about the role of intelligence sharing as part of this recovery process. Can you talk to me a little bit more about that? How is you know, Salv's technology helping to improve fraud recovery rates by intelligence sharing?
The thing is that when you look at how the financial institutions are using their own internal data and knowledge to build up their anti-fraud systems, their anti-money laundering systems, then actually they are, depending on the organization, sometimes they're quite good, not always. Like there's like still a lot of data which is being underutilized internally even. But we're talking about the case where, like, if a fraud team in one institution has got some signal or some notification, maybe from the end user, but also maybe earlier, that this transaction might be fraudulent, that this customer wants to do or has done it already. So they get internal alert, like one organization gets the internal alert, and they definitely do see where this money actually was sent to or where it's supposed to send to. And most likely this other institution has also anti-fraud team in place or AML team in place. And what they do is like they take this internal alert, extract the valuable information that's passed on to the other institution through the technical channel, which is like information is encrypted, and like this information itself is not high quantity, but it's high quality information in terms of it mentions the exact transaction or the customer or the names and details of this potential fraudulent case. So the other institution who gets this intelligence from the reporting bank actually is able to initiate the alert from their end. So it's basically this external message generates new alert for their fraud team, which they can actually start investigating. And like more than like in our case, like 80% of the cases, it's accurate alert, so that actually there is something happening also on the other institution side, which they can again suspend the account or like suspend the payment or like send the money back, even if it was like fraudulent. And they also respond back to this reporting organization about this like intelligence case or the investigation case, what they do with that. And sometimes we see that this kind of information or intelligence being back and forth several times between the two organizations. Sometimes even like third or fourth institution are being involved if this APP fraud case has been spreading between multiple different organizations. And thanks to this real-time like messaging between those organizations, thanks to the fact that there is a trust and collaboration happening between these organizations, actually they're becoming way more effective against this APP fraud than fighting all alone without each other's support. So that's technology is one thing, it's enabling, but actually the collaboration culture is the different thing, which actually allows people, encourages people to help each other. And of course, procedures are the third thing, because the procedures need to be in place in the financial institutions to make anything happen, actually.
Yeah, and this could all be done, like James said, kind of within that 5 days of the stop the clock. Then that's the best use of that time, right?
Exactly.
Yeah. And you mentioned there about sharing kind of key pieces of information. What type of information would they be sharing? What type of intelligence would they be sharing?
That's like a good, interesting balance between the bank secrecy and GDPR requirements and actual crime fighting ambition. And like the understanding is that there isn't a fixed list of features or fixed list of data points that should be shared or could be shared. Based on the GDPR guidance, like there has to be a reason, like the solid reason for sharing anything, right? It has to be like documented and auditable, this reasoning. And this reason can be that I suspect heavily that this transaction was related to APP fraud, and that might be sufficient reasoning. And then second point is like, what kind of data or intelligence I pass over? Like the less the better. Like it's if I'm giving you a hint or blinking an eye that you should look at this particular transaction or this particular customer without giving you even name, that's perfect. Well, in real life, actually, like sometimes there is like if there's transaction ID or like there is a date timestamp, or there is like amount and currency. Sometimes like a recipient name, sender name is enough actually to identify. Depends a lot on the specific legislation and like type of the payment, and also relationship between these organizations, what exact data fields are covered. But the point is that like usually with 2 or 3 features which are describing transaction, it's actually enough to identify the case by the both parties. And then if this investigation goes on, then actually they can write down some free text or like intelligence information about the behavior, typologies, maybe there are some meta information that helps to resolve this specific case, but also helps to detect other related cases which were not reported as a part of this transaction. So it's like, I know this is quite a vague answer, but it's always like this data exchange has to be justified, information should be minimized, and just the ultimate goal should be kept in mind, that why we're doing this. Like we're doing to stop fraud, we're like trying to reduce the financial crime, and that's always very solid and good reason actually to do this data exchange.
Yeah, I think you articulated that really well, Tavi. That is the fundamental point of this. Is prevent fraud. We think about the reimbursement scheme. It's there to protect customers. It's not actually solving the fraud problem in and of itself. That is down to the institutions to try and work on, and they're going to need help, from other institutions as well, maybe outside of banking. I'm sure we can come to that in a bit. But just I think you said that really well, Tavi. I think there's some hesitation with some firms, maybe smaller firms, again, particularly. They worry about GDPR. They worry about data privacy. What can't they share? And as you've just articulated, if it's about fraud or financial crime, then that is a just reason to do so. And I think the more we can educate institutions that this is a good step to take, the better, because I do think there is some hesitation that they're going to find themselves under X number of lawsuits or breaking some sort of legislation when it's just not the case.
And I've also seen that it's like educating the market can happen by the market participants themselves also. There are some like way more innovative institutions. They don't need to be fintechs. They can be also banks. Actually, as we have been speaking with many banks, then we do see that some banks are really eager to drive the innovation and drive the fight against crime, more eager than others. And if these kind of early adopters, innovators join the program of like for exchanging intelligence, then actually it encourages all the other members as well, and like all the other institutions to become member, regardless of the size or type of them. And also, like I say that, like by design, like banks tend to trust more the banks, and fintechs tend to trust more the fintechs, and crypto companies trust more crypto companies. So there are some mental barriers between different types of organizations. But if they see that, okay, someone close to us has joined already the collaborative crime fighting network, then others who are maybe not that innovative or not that early adopters are willing to join as well. So again, there is this kind of soft methods help quite a lot actually to grow the community.
It's really interesting you say that about, you know, the kind of the eagerness, obviously, to fight crime. I mean, that's why these people are in the jobs or doing the jobs that they do, because that's what they love and that's what they want to do, is fight the crime. And you talk about the kind of the mental barriers as well, because when it comes to kind of sharing intelligence or sharing information, it's already happening, right? It's already happening with those kind of more you know, wider sort of databases like your CIFAS and those sorts of things. But what we're talking about here is, rather than having a database of information after the fact, we're talking about being proactive here, not reactive to it, in able to stop the crime from taking place, rather than kind of analysing after the crime has happened and what we can use to prevent it.
That's true. That also these fraud databases, they are somehow quite useful. So like we're not competing them, or like they're all the elements that are needed in the market. Like they're like I would say that the opposite direction of the data sharing, where there are like lots of entries, lots of records, data points available for the members, which are needed. Like maybe the true positive rate isn't that high, but definitely there is like there are lots of cases which are true positive. What we're talking about here is actually, it's called like post suspicion, or there is already some alert or some suspicion going on, and there's a very tactical intelligence exchange or joint case basically between two institutions. So there isn't like massive database behind, but there's like crime case or potential crime case being exchanged between two institutions. But also in this case, you're right that unofficially intelligence sharing has been happening also in that space. Like whenever we get into more closer discussions with the people from the banks or fintechs, crime fighting teams, then actually in the end they say that yes, like we actually are doing some intelligence sharing between ourselves, like over the WhatsApp or over the coffee table, or give some hints to our old colleagues who are working in other institutions. So it's happening already right now, but thanks to this APP fraud mandatory reimbursement schema, that actually gives a more formality, that gives a good momentum for the institutions to do it more like officially and more openly and with the proper technology, so that people wouldn't need to take the personal risk that they're doing something in gray area without any procedures, without any encryption technologies. That has been very risky, but people have been doing it because they care about crime fighting, and they take the personal risk to stop fraud.
I'm just I've literally had a flashback whilst you were talking about all that, Tavi. I remember been working in banking a long time, and I started out in check fraud, and I remember having to do what we called interbank check fraud inquiries, where we would literally have a list of all the fraud departments for the banks, and you'd phone them up and you'd say, I've got this check, what does your account look like? And there'd be this little sort of standoff between the two. You had to see whether you could ascertain whether you got a bad one or not. And it's a circle, isn't it? We've come back around to it. We just got a lot more technology around it this time.
Yes, technology, and also like the government is backing us up much more, because like it's now like said much more clearly, like that intelligence sharing is here to stay. So.
Yeah, exactly. Thinking about that kind of mental barrier then, James, what can organisations do to kind of help in support the kind of culture, I suppose, around more kind of effective fraud recovery, but also looking at the kind of prevention and detection as well?
Yeah, it's an interesting question, and I think we'll see this play out over the next few months in different ways. I mean, obviously, everyone's focus is on prevention and detection, which is why we're here talking about the recovery element of it. And I think part of that sort of mindset change does come around the recovery piece, because it goes back to everything that Tavi and I have been saying, I think, in relation to that recovery rate is important to institutions anyway, obviously, because it's getting the money back that's rightfully should be with them, and hopefully it doesn't disappear off into another country or something similar. And really focusing on that it does something that banks and other issues like. It gives you a bottom line. It gives you a recovery rate. It gives you a value against something that you have to offset against the operational cost of what it is that you're trying to do on the prevention and detection side as well. So I'm hoping we will see, as we get further into this and a lot more work goes into the recovery side of this for institutions, that helps shift the way organisations think about APP fraud. Look, fraud's always been there, and it's always had a level of investment to an extent. It's never had the sort of focus as AML, which is more heavily regulated, or the immediate impact of, say, sanctions. It's just been something that's just sat there, and you kind of deal with it. And most of the big institutions, they just cope with it. It's an amount that they'll have to suffer, and so be it. My hope is, in relation to improving the recovery rates, is linked back to what Tavi's been saying around intelligence sharing and a real close sort of network of intelligence of like-minded people trying to make a difference in terms of shutting down larger scale gang operations in this. We see fraud as a service as a thing now. Fraudsters are selling their services to other fraudsters. It's a full-on economy. It has been for a little while, and I think we're going to see that on a more industrial scale at the moment. And the way to fight against that is to, well, use the same techniques they do, so use as much technology as you can, because they've already got hold of it. But also really link up back to what we were saying about intercompany and intersector communication and work as well. So I'm hoping it's maybe a bit of a longer term answer to that, but I'm hoping that the recovery piece will trickle back down into the approach that companies take in relation to this whole piece, in relation to fraud, and understand the importance of it and the difference it can make to society as well.
We've got a few minutes left. Tavi, I just want to end or finish up talking a little bit about the role of data in all of this. So all the way through here, we've been talking about, raising investigations during the suspicion phase, and obviously that requires having sort of monitoring of the data in place, and all of these things. Basically, the point I'm trying to make here is it all comes back to kind of the data, having the right data that's sitting in your systems. So can we talk about a little bit about that? Like, how can financial institutions kind of make sure that they've got the right hold of all of their data, and they're making kind of they have the right technology in place to kind of make sense of it all?
Yeah, like I've been doing the financial crime fighting for the last 20 years, and when I was working at Skype and Wise, I had direct access to the raw database, raw data in real time, real life, and I was able to write SQL queries and Python scripts and like play around with the data and like detect suspicious activities as it happened, and like change my monitoring rules. And I continued that doing at Salv as well. But when I started to help our customers, then I saw that actually majority of them have very limited access to their data, especially in the AML teams. This problem is much bigger. In the fraud is slightly easier or better, but actually in the AML side of things, people couldn't get access to real-time data. They saw only the partial information about customers, partial information about transactions, and that was like very sad to see that me as external helper, I had even more access to more data points than the people inside of these organizations. So that's why we started building our transaction monitoring systems, so that to give like better access to the crime fighters inside of organizations. So like my call is that actually this raw data or like real-time data exists in all these organizations, but due to the internal risk appetite and regulations, technology limitations, people who are there to make the best decisions cannot use this data properly. So I encourage, when you have internal resource, just build it in-house. But actually, I know that in-house building is super expensive and super hard way to do it. Then go for external vendors who provide you fraud and AML systems that you can integrate your own real-time data with these systems, so that people would have like more wider picture, like to make decisions. And then again, it's back to the, if they have like better ways to configure their monitoring rules and the fraud detection schemas, then they find more suspicious cases about APP fraud, and then they have power actually to initiate these joint case investigations with other institutions as well. So it comes in order, and like if you need to set the basis that use your internal data, get a better proper products for that, build up your knowledge based on these products, and then you can start sharing intelligence with others, and then the whole community wins back from that actually.
Thank you. James, anything from you lastly on that?
Obviously, I think Tyve and I agree on a great number of things, and I would continue to agree with him there. That's a very good example of building from a solid base, which is something that traditionally banks have struggled with. Data's not always been fantastic in any shape or form. You've got legacy systems, all sorts of things. With newer banks, it's kind of the opposite problem. It's they really haven't maybe got the experience or the exposure to understand what their data is actually telling them, which is where people like yourself, Tyve, can obviously come in and really help them there. I also say that I have seen a couple of examples of in-house built transaction fraud monitoring schemes that have leveraged AI, machine learning, and they've been exceptional. If you're in a lucky position to do that, then great. All you need is a team of geniuses, a lot of money, and access to loads of technology, and you'll be fine. But as Tavi says, that's not going to be feasible for a lot of people. So I think pulling in third-party expertise is definitely a way to go to get a really good handle on what it is that you're trying to achieve, because it might not be clear to you initially how you get from A to B that will enable you to get to the R of recovery, I suppose.
Yeah, absolutely. And I just think it's quite interesting. We've been using the term kind of intelligence sharing here as well, as opposed to sort of data sharing, because as you said, we're all drowning in data a little bit. Everybody's got access to, or most people have access to the data. But what I don't want is for you to be sharing more data with me. What we actually want, if we do want to get to that answer really, really quickly, is the intelligence around how we can very quickly resolve or work together, collaborate to resolve that fraud case, so that we can recover the stolen funds and blah blah blah, all be a winner out of it. But yeah, more intelligence sharing. Okay, I think we've come up to time now, so these conversations, it just always amazes me, they go so quickly. We've got so much to talk about, but thank you both for your insights and for that conversation. I found it super interesting, and I hope the rest of the audience did as well. I'm sure they will. So thank you very much.
Thank you.
Thank you.